Hi everyone, this is Paul Stewart here from Segmented Solutions. If you're a business owner and want a step-by-step guide to SSAS Pensions, then this 4-part SSAS Masterclass is exactly what you need. I've been helping business owners and wealthy property investors to reduce their exposure to tax for over 30 years. And when it comes to SSAS Pensions, we do get the same questions over and over. So I thought I'd put all the answers together in 4 short videos for you. If you want a free SSAS consultation that'll customize your SSAS planning and save you loads in tax, there's a link in the description below and you can book a call directly with me. Make sure you watch all 4 videos before we speak, as this makes our call far more productive and saves us both loads of time. Don't forget to like, share and subscribe so you'll not miss any of our new videos, such as our QNUPS Masterclass, which contains a whole raft of amazing tax planning ideas that have saved entrepreneurs millions of pounds in corporation tax, capital gains tax, and of course inheritance tax. So here we go, part 1 of 4, everything you need to know about self-administered pension schemes. Thank you. In this first video, we're going to explain the jargon. We're going to explain what is a SSAS, who can have one and how you set one up. We're also going to look at the key differences between SSASs and SIPPs. And Segmented Solutions, we're going to introduce the company to you. We're an administration company and also a SSAS practitioner. We'll explain what that jargon means in just a moment. But basically, we get involved with SSASs and QNUPSs and other forms of tax planning for wealthy entrepreneurs and business owners. So if you are in business or are looking to invest in property, be that commercial or residential, and you'd like some tax advice at the upper end of the scale, then please do not hesitate to book your free tax consultation. So let's start at the beginning and explain what is a SSAS. Okay, so SSAS, it stands for Small Self-Administered Pension Scheme. Normally have less than 12 members and they are administered by the members themselves. It's an occupational scheme and not a personal one, so you do need to have a business because you're going to need a sponsoring or principal employer to actually establish the scheme, a legal entity which is separate to yourself. They're set up for directors and employees, not just now, but also in the future, and that has some key funding and retirement planning benefits to it. Multiple members can join a SSAS, so if you've got a family with husband and wife and grown-up children, they can all become members of the SSAS, and that actually helps with some inheritance tax planning later on. You can accept incoming transfers into a SSAS, and you can also make employer and employee contributions into your SSAS. You can pool together all your SIPPs into your SSAS as well, absolutely no issues with that. Key things that are different between a SSAS and a SIPP. We've already mentioned a number of them, but let's just go through some of the key ones. A SIPP is a personal plan. It only has one member. So it is personal to you, and the funding limits within it, the lifetime limit and all of the other pensions regulations apply to that for you as an individual. A SIPP is established by an independent SIPP trustee or insurance company, so you will always have FCA regulated people involved in telling you what you can and can't do. And SIPP providers have different attitudes to investments, and you might find that your existing SIPP provider says yes to a particular investment you're looking at, whereas another may well say no. And we find a lot of people actually pool together all of their SIPPs into the one SSAS. Particularly where you've got multiple directors, so you can have 4 or 5 people all coming together to form a business, and each of them has their own SIPP, and they can transfer them into their SSAS, the one SSAS, which can then be pooled and used for investments. A SIPP doesn't have a sponsoring employer or a principal employer. It's obviously a personal arrangement. It doesn't mean that you can't receive employer contributions into a SIPP in exactly the same way as you can with a SSAS, but there's no relationship with your SIPP with a particular company. A SIPP cannot invest in or lend to any connected party. So if you have a business, you cannot have funds out from your SIPP to invest in that business in any way. However, with a SSAS, you can get involved. A SSAS is allowed to have a relationship with anyone that it's wanting to, including the sponsoring employer, subject to HMRC's rules. A SIPP is FCA regulated and a SSAS is not, and that's something which is actually of interest to people particularly who are offshore. You can have a SSAS even if your sponsoring employer is not UK based, and offshore investors often use a SSAS for their property investment because it's a tax exempt environment within the UK, but they don't have to abide by the pensions regulations, and also they don't have to have FCA regulation over the top. Although FCA regulation is actually a good thing in many cases, it actually adds complexity and cost, which a lot of people aren't happy with. So a little bit of difference between a SSAS and a SIPP. We now move on to some of the jargon. We have administrators, trustees and members. So who are the main people involved in a SSAS? Well, first of all, you have a scheme administrator, and this is actually an official HMRC role. It can be an individual or a company, but the administrator effectively has the responsibility for ensuring that everything that goes on is within the pension scheme's rules and that they report to HMRC properly. Scheme member, you can have 1, 2, 3, 4, 5, many members. Those are individuals who are connected with the sponsoring employer. They can be directors, they can be employees. There's no need to actually be employed if you're a director, as long as you're an officer of the company and have that connection with the sponsoring or principal employer. There's also scheme trustees, and as a note, each member that joins a SSAS actually becomes a trustee. Remember the name self-administered? Well, if all of the members are trustees, then that has implications for investment decisions, because everything has to be unanimous between the trustees, and it also means that you're not making investment decisions on behalf of somebody else who's not actually a trustee. There's also a scheme practitioner, and that's a professional person or company appointed by the administrator to actually ensure that everything is done according to HMRC's pensions rules and compliance. So, for example, if I were to be in business and I had absolutely no knowledge of pensions rules and regulations, although I'm quite able to become the scheme administrator because it's my SSAS, I would appoint a practitioner, a professional organisation or individual who would actually take care of all of the compliance and reporting. However, as the scheme administrator, I'm actually still responsible for checking everything. So we work very closely with individual business owners. We provide a practitioner service through segmented solutions. And in that way, each person who's got a SSAS can rest easy and know that they're not going to do anything that will give rise to some unauthorised payment surcharges that we'll talk through later. Okay, so what are the steps in establishing a self-administered pension scheme? First of all, the sponsoring employer has to have a meeting and agree to establish the scheme and also give it a name. And this is done by a board meeting where the directors agree that they would like to set one up, and we assist with putting the board minutes together for you in terms of pro formas and drafts. And in fact, on our website, we've got a 10-step process to go through for establishing your SSAS. The sponsoring employer appoints the first administrator, and in this particular case that'll be Segmented Solutions, so that we can actually assist you in getting HMRC approval for your scheme. Once that's happened, then obviously things can change and you can take over as the administrator with us as the practitioner. Once you've actually appointed the administrator, there's an establishment deed that is signed and witnessed, and that actually formalises the trust, that formalises the SSAS. However, it doesn't give it the tax incentives that you associate with a pension, because that actually needs to be given by HMRC. So the scheme administrator will log in to the HMRC system and they'll complete an online application. So that's stage one, from the sponsoring employer sitting and agreeing to set up a SSAS through to the administrator logging in and completing a formal online application to HMRC. And this is HMRC's process from that point forward. First of all, they review the application and they always ask for further information. It's nothing to worry about, it's normal, and in fact it's to protect business owners from being scammed. There are many business owners who've been promised investments by investment providers. Just as long as you set up a SSAS and transfer all your pensions into it, you can invest in some spurious investment. So HMRC are checking that you are legitimately setting up your SSAS for business purposes as opposed to being scammed, and they make no apology for it, and I don't either. It's a frustrating process and can take some time, and we just have to go through it. Once HMRC have had all of their further information, they will issue a Pension Schemes Tax Reference Number, a PSTR. And that means that your pension scheme is now live, not just as a trust, but it's live in terms of HMRC will allow and approve it for various tax concessions. For example, your company will get tax deductions on contributions into the scheme. Now the scheme is live in all respects, the scheme administrator can use the pension scheme's tax reference number to open a bank account. And from that point on, the SSAS can now be funded, and once the funds are in the bank account, money can be invested. So let's have a look at the final stage. Member trustees are added to the administrator role. So although we Segmented Solutions start off as your scheme administrator to make it live, once it's live, a director of the sponsoring employer themselves, they apply to HMRC to be granted administrator status and to be given their administrator ID number. The sponsoring employer appoints them as the new administrator of the scheme, and the existing administrator, ourselves, Segmented Solutions, we log into the HMRC system, and invite the new administrator, that is yourself, to take over, and then we resign. So you are effectively the administrator responsible for the scheme, but if you don't have any pensions. So the next step is looking after administrators who don't have pensions knowledge. The first thing is that they can get technical support by appointing a practitioner. And a practitioner is a company or an individual, and in this case Segmented Solutions Limited is a formal practitioner with an HMRC ID number, and we can be appointed to your scheme to be able to submit accounts and any reporting back to HMRC on your behalf as the administrator. However, all of the compliance is still your responsibility. All you've done is delegated the administration to a practitioner, someone who has the knowledge and experience to be able to support what you're planning on doing. So there you go, that's all the jargon involved with establishing a SSAS. And if you're running a business and you want to establish your own self-administered pension scheme, go to segmentedsolutions.co.uk/SSAS and you'll be presented with a clear guide of 10 steps with all of the documents that you need to download and fill in to be able to set up your own SSAS. My name is Paul Stewart, and email address is sas@segmentedsolutions.co.uk. Also got my mobile number on screen here, 07786 396 722. Don't forget there's a link in the description below where you can book a free consultation and we can talk to you about setting up your SSAS. Part 2, which is the next video, will look at SSAS lending and borrowing. So we hope you've enjoyed part 1 and go and listen to part 2. Thank you very much.